Hey guys, so I have the chart for Stellar open on the monthly time frame here. The ticker for this is XLM, and yeah, I just want to take a look at the recent price action. Now, before I do, I should mention that if you're not subscribed and you want to be able to get notified when I release further TA videos in the future, you should subscribe now and then click the bell and then click on all because this is a new channel and I have very low subscribers, just a few hundred. So because of that, when you type a certain coin in a search engine, you're not really going to get my channel. It's unlikely anyway. They're going to prioritize the channels that have been around longer with a much higher subscriber base. So yeah, if you want to get more updates from me in the future, just subscribe now. Okay, so I'm going to start this analysis on the monthly time frame. And there's something particular that I want to show you on the monthly. So if I do this, I have this really cool indicator. It's called the Ultimate Stochastic, and normally it's just between red and green. And basically, more often than not, when this thing comes down all the way to as low as it has right here, and it flips green and then starts heading up, more often than not, that will show a change in the trend, right, in the price action. So, okay. Next up, as you can see, I'll switch to the weekly to show you this. As you can see, we had this long standing from May 2021 until just recently. We were getting the price was getting suppressed by this downtrending resistance line. We had multiple touches on it: 1, 2, 3, 4, 5. Ultimately, we broke out and we successfully retested it. So once we broke out of here, you see this candle right here. This long wick, basically it shows that the price came down here, wicked off of it. Buyers came in and defended this level, and then we successfully flipped this from resistance to support. So that's the second very bullish indicator that I wanted to show you. We broke out, we came back. This can be considered to be like a double bottom, and then we broke out. On speculation, I think the speculation was XLM was going to have something to do with the FedNow slave currency system. Okay, so if you want to trade this, previously I had drawn this down-sloping resistance level because this was a very significant resistance on the chart. It's not really in play anymore unless for some reason the price came all the way back down here, and then basically this could potentially serve as a level of support, but I really don't see that happening. So yeah, there's really no reason to keep this on the chart at the moment. Just kind of clutters everything up. So if you want to trade Stellar, I suggest that you mark these two levels on the chart. So on the weekly time frame, you can draw this in right here, and I have that at around 17 cents, so 0.1704. And basically to get that, just try to identify these the candle bodies right here, and then put the horizontal line right there. And then the second line I suggest that you draw would be right here at around 13 cents. So 17 cents and 13 cents. Those are the levels. And the reason why here, you see, basically you can draw it right where this line kind of supported these candle bodies right here. And then once we broke down from there, this support flipped to resistance. And then as the price would come up, it would just sell off. So you see these two candle bodies, they could not close above it. And here we wicked up, but then got slammed down again. So yeah, these are very significant levels right here. And as you can see, we recently broke out of this level, but we have not yet tested it as a support. And when we broke out of this level, where did we come to? We came up to the next level that I suggested that you drew, around 17 cents. And now this is the level that the price is fighting with, right? So you see we came up, we got above it, but it sold off. We got above it again, sold off. And now we're kind of forming. This might end up to be some sort of like a doji candle here. Basically, this is an indecision candle. We're getting a lot of resistance at this level. So if the price can't get past this 17-cent level, I would anticipate a sell-off to come back down to retest this previous level of resistance as support at around 13 cents. It may possibly get supported right here. Where is it here? Horizontal line. Right here, this level may act as a support level as well, so you can be on the lookout for that. Just look for how the candles are reacting to this level. But ultimately, since we haven't retested this, I think there may be a good chance that the price comes to retest this before heading on up. Now, no guarantees, anything can happen. Now, you can play these ranges. So for example, if let me see what's going on the daily time frame here. Okay, yeah. So on the daily, actually, this is quite bullish. So on the daily, we're forming what's called an ascending triangle. And if you look back to my analysis of Chainlink over the last few weeks, I put out a video showing that Chainlink was forming this bullish pattern at the resistance level. And then maybe 2 days later, it just shot up and broke out. And then we end basically where we are on Chainlink right now after the breakout is the price came back and it retested this level. So that might be what happens right here. Keep an eye on this. Go to the daily and draw this level on your chart as well. Let me see how it appears on the 4-hour. You can draw it on the 4-hour as well. Maybe that's better. So just put this kind of upsloping support line. And basically it's this pattern right here. You see? So you have this flat level of resistance, then a rising lower trend line support. And then eventually the price will kind of bounce around in here. And then more often than not, the price will break out. So actually, now that I'm seeing this, we may not make it down to retest this level, considering that's quite a ways down. So yeah, keep an eye on that. If this level breaks, so you can look at the 4-hour, if you start closing 4-hour candles below this support line, then yes, you can look to target down here from perhaps a short, or maybe if you don't want to short because ultimately we are showing signs of bullishness, then you could just patiently wait for the price to come back down to this around 13-cent level here. And then perhaps you can look to enter a long position, and that would be a very nice long to take. So let's say you entered a long. Right, yeah, hold on. No, let me switch this to the daily. Yeah, okay. Let's say the price came down here and you entered a long. You got in, you put your stop loss. You'd have to put your stop loss below this cluster right here, these wicks, and then you can target the upper range that we would have fallen from. So this is a very nice trade. So you would essentially risk 5.56% for the chance of getting 30.27%, and that's a risk reward ratio of 1 to 5.44. So in other words, for every $1 you risk, you could potentially make $5.44 back. So yeah, that's a good potential trade. As for shorting right here, I wouldn't recommend it, only because, as I mentioned, we are forming a bullish ascending triangle pattern. So it's a little bit risky to short right here. I mean, you could, but if the price comes back here, yeah, you could enter a short and target the lower line here. But a higher probability trade for me is the one I just kind of outlined. If the price ends up coming back here, then you could enter a long position and then ride it back up for the 30% gain potentially. Okay, so actually let me go down to the 4-hour and see what's popping on the 4-hour here. Yeah, big rejection. We're coming down. You know, alternatively, what you can do, if the price comes down to this level here, this upsloping support line, and you didn't want to wait for it to come down here, because it might not, no guarantees. This could be an opportunity for a long position as well. So let's just see what that would give us. See if it came down here, you can enter. You have to place your stop below this swing low right here, so, and then target the top range. So again, this is not as good as the other one, but the other one's not guaranteed to come down here. The price coming back to retest this upsloping support line is much more likely, at which point you could enter a trade. You could risk 4.32% for the chance of gaining 16.19%, a risk reward ratio of 1 to 3.75. So yeah, that's a very good opportunity. I might even mark that for myself and maybe enter. But yeah, overall, guys, we're showing signs of bullishness. Obviously, we're just between these two levels here. I imagine if we don't get that breakout anytime soon, the price might bounce around in this range for a bit. But when we break out, you might be wondering what the potential targets are. So to estimate that, I want to find confluence. So the first thing I'll do, I'll take a Fibonacci tool and I'll draw from the the top down to the bottom here, the high down to the swing low. And I want to look for Fibonacci levels that line up with confluences in the price. And the first one I see, so right now you'll see we're struggling right here at the, we have the 3A2 Fibonacci level, which is just in this cluster where we have the previous price action right here, the former support serving as a resistance. So yeah, it's no wonder why we're getting a lot of resistance at this level. If this level breaks, the next level is going to be around 23 cents, between 23 and 24 cents. and you'll see this is the 50% level, 50% fib retracement, and if I mark that out so you can see it clearer, that also lines up with here, the this kind of resistance level here. So yeah, this is going to be a very significant level. And then if this breaks, you have the 618 right here, horizontal line right here. And this one, I'm not seeing that much confluence with the price action. See the price kind of just cut through here. Yeah, and this is on the weekly time frame, so not much confluence here, but I imagine this is also going to serve as a resistance level. Oh, right here, and with support right here. So yeah, this level right here around just under 32 cents, or around 31.03172, and then ultimately, if this breaks up to the 786, which is around 47 cents. And that's not to say that, and after that you have the all-time high. That's not to say that the price can't go much higher than this, but the price moves in basically like a staircase, right? So typically, you break out of one level of resistance, you kind of fight with so you break out of one level of resistance, you come to the next level, then you kind of back test the previous resistance as support, then you make your way up, and it kind of just works like this in waves, like a staircase all the way up. And you can play these ranges. So for example, if the price comes to the 50%, the first time it touches it, most likely there's going to be a bit of a sell-off. So you can just be waiting up here with a short position, a very modest short position. But what you want to look for is what's happening right now as the price approaches the resistance level. Go to the smaller time frame and see if it's starting to form like a bullish pattern, which is, again, I showed you we're forming an ascending triangle right below this 382 and this previous support, which is flipped to resistance. Yeah, so that's way to trade it. And now, the more often the price hits the level, the more likely it is to break. So usually on the first touch, you're going to get a sell-off. First touch, you're going to get a sell-off. So those are the ones you can play. Be more cautious about entering shorts on the second or third touch when it's forming a bullish pattern. You have to be very cautious at that point. I probably wouldn't recommend it. And obviously, this is basically, we're seeing a shift in the trend here. So basically, we made a higher high in relation to this, and we made a higher low. So this is indicative that the trend is shifting. So whenever the price, say you break here and the price comes back to retest a former resistance level as a support, those are ones that I would be more anxious to get in, or more likely to enter, as opposed to the shorts. Okay, yeah, that's just a quick analysis of XLM, or it's probably not quick. I don't know how long I've been talking for, but yeah, maybe it's over 10 minutes already. Yeah, hopefully that was helpful. And once again, if you're not subscribed and you want to get updated in the future when I release more of these analysis videos, just do that now. All right, guys, take care. Have a good day. Bye.